There's a lot of issues here, but let's focus on really service cost allocation, single dual rate method, budget versus actual. This part, step-down methods covered in the video. Other cost allocation issues, we really don't have time to get into that. Okay, so we're really going up to here. Everyone clear with that? That's where we're going. Ah, I love this. What do I call this? This is my resource eating machine. What do we mean by resource eating machine? This machine is eating up my resources. This could be a customer, ouch. This could be a product, okay? It is eating resources, and this is the big dilemma that companies face. To what extent do they try and allocate everything to the final product? Well, as we learnt in activity-based costing, we try and allocate a lot, but there's always some sort of sales, admin, and finance expenses at the bottom of the profit and loss. You know, we can allocate it, but how much of those allocations are controllable? Okay, what about corporate sustaining costs? They can't be allocated in a cost benefit, in a cause effect and approach, as we learnt in the previous presentation. But here's the dilemma. With customer profitability analysis, with activity-based costing, it was quite straightforward. It was all about cause and effect, the resources, cause and effect, cause and effect. We tried to focus on that. Very operational, very operational. Benefits received is very much focused on outcome, not so much the operational input and process. But here's what happens. Here's what happens when you put people in an organisation. What happens is now you've got two types of decisions to make, because the first type of decision is an decision facilitation. All right, and that's more like, that's the economics, right? How do you facilitate a decision? You provide more accurate information. More accurate information. You provide more accurate. So plant-wide rate is one level of information. Activity-based costing is more accurate information. You with me? Pricing for that you sell to a certain customer is one bit of information. Customer profitability analysis is more accurate information. You with me? So the solution to improving, making better decisions is to provide more accurate information. All right? But up until now, this is week 5, we haven't talked about this other thing. And I love this part. This is called decision influencing. Decision influencing. What's that? We haven't talked about that yet. What is that? Is that relevant? Whenever you have humans inside the organisation, and we have some here, okay, then there's a possibility that we need to engage in some decision influencing. We may need to engage the minds of these people, because often when you pay a wage, people, in response to the payment of the wage, they physically come to work, but their mind is not at work. All right, they come to work, they play with their smartphone, they come to work, they talk. They come to work and they don't work their 8 hours. They are not engaged, they don't have the discipline, they're not influenced. You are not influencing them. So I have an idea, why don't I try and influence you? What if I said, if you want to come to my lecture, you will have to pay me $100. You will come to my lecture, $100 please. 12 lectures, $1,200. And maybe I'll be allowed to do that one day. University won't allow me to do that now, but maybe I'll be allowed to do that one day. And when I do, and you pay that money, you can be pretty sure that you're going to concentrate in that lecture, because you'll be thinking, I've got to get my $100 worth. And when our friend asks, has anyone got a question for this Hello Kitty thing? I would not need to dangle a Hello Kitty thing to get you to answer, because you will be asking questions left, right and centre. Why? Because I want my $100 worth. See? So suddenly that $100, just because I put a charge on this event, becomes a decision influencing factor. That's what we mean by decision influencing. It's affecting the decisions inside your mind. It's affecting your psychology. Okay, how much you choose to be focused and give attention. You with me here? All right, so that's what we're going to talk about tonight. That is the big idea. That is the big idea. How can we use cost allocation to affect decisions, influence decisions, actually influence your discretionary behaviour, influence your attention, influence your monitoring behaviour. Wow, isn't this amazing? This is like control. How can I control you? Okay. Suddenly this course is becoming more interesting, right? Okay, so we start to talk about psychology and control. And oh yes, from week 6 to the end, we're going to be talking more about that. Put your hand up if you're interested. Oh, I can see it already. I've got you engaged. Great. Okay, I'm excited too. I'm just getting started on this. This is the last week that we're going to talk about cost allocation, because next week onwards it's into control aspects, the whole control environment. So I'm looking forward to that. Even more excited about that. Okay, so we have these people in operating and operating department. We have service department, cafeteria. We have accounting. They've got people in them. What else do we have? We have personnel. They have people in them. Okay? And we have people in the cafeteria. Why? When you go to the cafeteria, someone serves you the food, right? They've got to be paid wages. Okay? So who makes sure they do the right thing? Accounting. You have an accountant. There's some dirty accountants around. Okay? And then there's accountants that do the right thing. All right, service department, personnel. Do they select the right people? Are they doing the right thing? Wow. Suddenly an organisation, we thought the object was to get a more accurate product price. We thought the object was to get a more accurate customer profitability measure. That's decision facilitation. That's for decisions about, do we make or buy a product? Do we continue with a customer? All right, they're okay, they're decisions. That's what we've been looking at. But now we're looking at, is there some way that we can control these people? Okay, yes, we can use these allocations that can feed through to the final product price, but I don't think it's going to make as much difference. Okay? The big idea I want you to take away tonight is that this is not another boring allocation approach. This is a real way to control people in the organisation. Not control in a negative sense, but control in terms of creating awareness beyond your own department. And let me show you how that's done. Okay? So, notice there are different ways that we can use evaluation. But before we get on to that, tell me, in Hong Kong, what are the largest industries, the 3 largest industries in Hong Kong? Do you know what they are? Pardon? Hands up for real estate. Hands up for banking insurance. Hands up for education. Hands up for import-export trade. Hands up for medical. Hands up for retail. Yeah, those are shopaholics. Business services. Restaurants. Okay, the answer is import-export trade. Retail, business services. Interesting, huh? Are you applying for jobs in those areas? Okay, you think about that, right? What I want to say here is that Hong Kong is a service economy, and you're probably thinking, what's cost allocation got to do with services? Most service establishments have a front office, and they have a front office and a A back office, yes. So the front office deals with the customers and the back office deals with the accounting, the follow-up. You with me here, right? There's two. So it's possible we can use this idea to allocate back office operations to front office profitability centers. You with me? It's not just manufacturing. Okay. So here's some more evidence about why it's important to allocate service department costs. And let me just pivot a little bit here. We just want to pivot, okay? Because the example I gave you earlier was cafeteria, accounting, personnel. Are they really large back office operations? Are they really? Are they the largest? Probably not. What would be the largest back office operation? What do you think? What do you think? What do you think would be, you look at all the multinationals around the world, not just Hong Kong, what would be the largest expense in any of their back office operations? Pardon? Come on, louder. What is it? IT, yes. IT. IT. That is a huge expenditure. So I'm grateful that this example in the Horngren textbook looks at IT, not just cafeteria or accounting or personnel. All right? Because IT is a big elephant in the room. Let me explain to you why it's big. Because a lot of companies are unsure about whether they should keep IT in-house or whether they should outsource it. All right? Every company goes through this question. To what extent do we keep it in-house? When do we actually outsource? It's a difficult one. It's not just, oh, what are the numbers? There are lots of other factors to consider. There's quality factors. There are growth factors, just like customer profitability. You've got all these other factors here, okay? Because there are plenty of companies out there that would like to take that service from you. Here's some reasons why IT is another big issue for these multinationals. Because it's huge. We have to allocate IT costs somehow. It's too big not to pay attention to. It's such a big investment. If we don't allocate it somehow, then people will not appreciate it. They will not value it. They will not be influenced, in other words, in terms of appreciating, aligning with it, valuing it, using it properly. You with me here? They will abuse the resource. Okay? And that's where we get back down to decision influencing. In other words, what I'm saying is IT, number one, is so large that you have to allocate. You have to allocate IT costs somehow. I'm not telling you how you should do it. I'm just saying you've got to do something. You cannot just say, oh, let's not allocate, because what will happen is people around the organisation will just run over it. They will just ask for more and more and more. Oh, can you get this software? Can you get this software? Oh, can you do this? Can you do that? And then suddenly the IT budget just balloons out of proportion. And people don't appreciate it. They're just going to complain. All right? So what most companies need to do somehow, they need to allocate somehow. Why? So we can influence. So we can influence the use of the resource. Decision influencing. That's all we're trying to do. That is the big idea tonight. Nothing else. That is the big idea. You've got this huge expense, largest back office expense of most companies around the world, large companies. And the challenge is, if you're not outsourcing it, then you need to allocate it somehow. Otherwise, people will not appreciate it and they will abuse the resource. And it's going to be like a big black hole. Money just keeps going in year after year. Okay, so we start allocation. Why? We want to influence people. Influencing can be something like just educating them. Look, this is not free. Okay, you want to use more of the resource, well, then we're going to charge you more. Okay, you create accountability. You create a stronger culture where, oh, I'm the big production department. Oh, I'm the big front office. But you're not the only department. You're not the only office. You are the big one, but you still need the IT department. Okay, so let's keep going. We can have a look at, this is what one IT manager of Motorola. Okay, there's 2,000 people in your town, and we were to divide the town's usage by 2,000, charge each one of you, then you'd likely object. If it doesn't work with power, why should it work with IT? This is the issue about how can we charge IT resources to other people in the organisation. You have to somehow. You have to, even if it's $1, because you just need to get the attention to say that, look, you're the big front office, but you depend on this IT. Okay, and the IT is not free. All right. Another quotation, it's way too much work. It's never an ending debate what constitutes a fair share. Fairness. Remember fairness, equity? Okay. In the end, it comes down to this. What am I being paid to do? And I think I'm being paid to do more than just debate MIPS and CPU cycles, which are some of the KPIs that may be associated with the use of IT. And so here's a vice president that goes into meetings and people are complaining about use of CPUs and MIPS, use of IT, but we should be talking about more strategic things. Okay, so obviously it's a very contentious issue. You definitely have the attention when you start charging. You're definitely influencing, okay? So how best can you influence other people in the organisation? Okay, we tend to bring that sort of expense up to the top and call it an IT budget. So IT budgets are really big, they're much more important. Okay, another one, if all you do is reshuffle costs within the company, then chargeback probably isn't worth it. But if you think that people will make better decisions by being forced to confront the cost, then there is value. Wow, isn't that amazing? If you think people will make better decisions by being forced to confront the costs, then there is value in allocating the cost. So it could be two types of decisions. It could be decisions with respect to facilitation, or it could be how they act in their department. Okay? Decisions about what is the budget for the next year and how much IT they're going to use. Okay? So they might be more responsible. That is a decision, being more responsible. Okay? So I could ask you now, we skip forward now, a learning objective summary just to remind you. Service cost allocation basis. Why we need to allocate service departments? Well, we can logically think that, okay, we should allocate personnel, accounting and catering because they're obvious resources being used. But the big elephant in the room is the IT budget. Okay? That's the big thing that a lot of companies have trouble with around the world today. We can use a single dual rate method. I'm going to explain that to you, and then I'm going to explain to you what it means to use budgeted or actual cost allocation. And we're going to apply it to IT. So let me remind you again. Service department cost allocation can be for decision facilitating. It can be for performance evaluation, which is decision influencing. Okay, performance evaluation is about influencing people. I evaluate your performance, I suddenly going to influence you. You will have an exam at the end of this semester. That's going to influence you. If I tell you little tips in each lecture, it influences you to come to the lecture. Okay? You with me here? Okay? Performance evaluation is decision influencing. You can replace the P with a DI, okay? Profitability determination, this is reporting. This is required by just annual reports, if you're a listed company, things like that. You need to determine the value of inventory, so that's why you need to do allocations. All right, reasons for allocating service department costs. So there are 6 here, and then I think you got the answers in front of you. If we want to encourage operating departments to wisely use service department resources, that is decision influencing. Okay, and the operating word here is wisely using service department resources. If we want to value inventory for external financial reporting purposes, then that's reporting. That's not influencing or facilitating. If we want to create incentive for service departments to operate efficiently, again, that's decision influencing. What do we mean by incentive to operate efficiently? By actually using the IT when only they need to use it. By actually not asking for more software than what they really need. By not requesting the technician come whenever there's just a small problem that they could actually work out themselves, by going through a PDF printout of frequently asked questions and how to solve problems. You with me here? All right? But they ring up the IT personnel, can you fix this, can you fix this? And the IT person's running around everywhere all the time, fixing the same old problem. You with me? Behaviour like that is what you can avoid, okay? By charging. Oh, IT personnel are going to come and fix something? Oh, that will be a charge of $100. Are your department okay with that? Then you might think differently, change your decision, okay? That's decision influencing. You with me here? Decision influencing is so critical, okay? As it's so valuable for why we allocate costs. Then we have to include overhead in the cost base when cost plus pricing is used, decision facilitating, to help measure profitability operating departments, reporting again, and that's more accounting base. Okay, so we have our people in the organisation, and we want to influence how these people here use the resources of these people here. And just a quick reminder of what we covered last week about the benefits received and cause and effect. Fairness or equity is difficult to agree on. How do you know? Well, I showed you the quote before. This vice president goes to the boardroom and all they complain about are the different bases for allocations, when they should be talking about strategy and the whole direction of the organisation. Okay? Fairness or equity, difficult to agree on. Ability to bear raises issues related to cross-subsidisation across users of resources in an organisation. Thus, you could argue there are 3 types: benefits, cause and effect, fairness, ability to bear. But the benefits received is all about the outcome. Cause and effect is about the inputs and the processes. And I think our group that presented tonight gave a nice flowchart of that. Okay? I think, yeah, a nice flowchart going in. Okay? Cause and effect came first, benefits received came at the end. So I can ask you, with all these service departments, what are the allocation bases for this? So, did you want to spend just 60 seconds to see how many of these you can match with the service department? I'll give you 60 seconds, I'm serious. Starting from now, go. You got time, you're under pressure. What did you do when you're under pressure? Did you just start? How many of you just started at the top and went down? Where did you start? How many of you started with the easiest ones? Yeah, that's what you should do. Focus on the easy ones. When you're under time pressure, exam tip, focus on the easy ones. If you get stuck, just move on. Stuck, move on, okay? Let's keep going here, all right? So, what you've got is some of these and they're allocated across. I'm sorry, we're a bit short on time, so that's why we want to just skip over this, but this is something you can spend a bit more time on your own time, but there's your allocation bases here, And without, oh, interesting. Without going through all of it, you have the power. You have this PowerPoint and solution in Moodle you can download tonight. Okay, so you have this in front of you. You can check that. But you see laundry, pounds of laundry, makes sense, right? Airport ground services, number of flights. Cafeteria, number of meals. But you can say cafeteria could be number of people, because it's sometimes harder to count the meals. For example, when I was at City University of Hong Kong, I got to know the manager of Maxim's, who was the main caterer in the student canteen. They were doing more than 8,000 meals a day. Getting back to catering, cafeteria, it's better to allocate according to the number of people on the different departments. It's very, very critical here. All right, allocation pitfalls to avoid. Allocating fixed costs using a variable allocation base, or fixed costs allocated to one department are heavily influenced by what happens in another department. So fixed costs are very tricky, so be careful. Don't allocate them using a variable allocation base. You've got to use a budget. You probably need to have a budget at the start. And we'll look at that. So we've got a single rate method, we've got a dual rate method. So what I want to show you now is basically, here are the considerations. I'm going to take you through the difference between a single and a dual rate. And then in this example, I'm going to take you through the difference between an actual rate and a budget rate, just to make sure that we're clear here and we're clear on those two dimensions. That's what you want to take away with the example we're going to go through. Are you ready for that? I think the next 20 minutes is going to be very intense. So what I'm looking for in telling you that it's going to be, I'm trying to influence the decisions that you make in the next 20 minutes to just make that a little bit of extra effort to pay attention. Even when it may border on boring, just tell yourself, okay, just 5 more minutes. 5 more minutes and it's all over. Okay, so just tell yourself that to focus, all right? So fairness, controllability, capacity planning, decision making. This is why you use budget rates. This is why you use actual rates, relevant costs, efficiency and accuracy. You're trying to use, this is why you use dual rates, so you can get more accurate costs, more efficiency and more accuracy. And I'll show you that in a minute. You use a dual rate over a single because you might have a fixed component and a variable component. That enables you to get more accuracy in decision making, more efficiency and more relevant costs. If costs are more relevant, you separate the fixed and the variable, they become more relevant. The variable is very, very clear. And if you use, especially if you use an actual variable and a budget fixed, then you've got that perfect allocation component. All right, and so let me take you through the example where we actually show how these things really work. Okay, so what I'm going to take you through are the benefits of a single rate. Generally, the benefits are you basically just want to control. You just, ultimately, why do you allocate? If nothing else, you just want to influence. As soon as I start allocating $1 to your department, what's that dollar? Why is that allocated to me? Suddenly you pay attention. Where does that come from? Oh, it comes from this department. Oh, now you start watching that department. You start monitoring that department. You start asking, are we getting value for that dollar that they are allocating to us? You with me here? As soon as you put a price on this inter-firm exchange of resources, that's what it is. As soon as your staff go to the cafeteria, you are exchanging resources. Cafeterias mostly are subsidised in-house, most companies around the world. Okay, so you're exchanging resources. But if you start allocating some cost of that subsidisation to your department, now you're going to start monitor. Are they providing the right food from my people? Are they giving us a good service? Are they serving on time? Do they come back late because there's so big a line at the cafeteria? Are you with me here? All right? But when they were free, you never asked these questions. It's free. Why are you complaining? You got something else to complain about? No, it's okay. It's all right. You want to go outside the organisation? Yeah, okay, no, we're happy with it. You won't get any complaints when it's free. But once you start allocating dollars, now you start to get monitoring, you start to get complaining, you start getting feedback. Okay? What are you doing? You are creating, you are starting to influence the thoughts of the recipients of that service. They're starting to think, am I getting value for money? They're starting to act like a customer, like an internal customer. Ah, that's what we mean by decision influencing. Dual rate versus single rate. Benefits, again, same as single rate. You're controlling service. The user department might complain, but here, the user department might monitor. Monitor is the operant word. Monitor is the operant word here. Number 2, single relevant costs to the user department for decision making. So when you have a dual rate, you can get relevant costs. So the benefits of a dual rate over a single rate is the single rate gives you control, so does a dual rate. But a dual rate enables you to have relevant costs for decision making. Relevant costs for decision facilitating. Let me explain to you what we mean.